Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Thursday, January 27th. This will be a technical analysis breakdown, so if you are somebody that uses charts within your trading, or maybe you're just interested in learning more about charts and how this tool can be used to help make good decisions as a trader, this will be a video for you. Before I get to the watch list, I want to first just personally invite you to get signed up for this free live online class that I'm offering here very soon. So if you're liking what you see as I go through the video and you want to learn more about this tool and how it can and should be used to build consistency as a trader, then certainly get signed up for the free class. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, then there's an area right there on the webpage that you can click on. So like I said, if you're liking what you see, then certainly get signed up for the free class. Now, one quick note before I get to the stocks, the market is still open for a little bit of time. So I just say that because you're not crazy. The price that you do see over here is moving. So the market's just open for a little bit while longer. And I like to do these videos when the market's still open because sometimes we can capture some really interesting price action. So just keep that in mind. First one, of course, got to start off once again with SPY, which for you beginners is just an exchange traded fund, an ETF that tells you basically what's going on with the entire market because it's the S&P 500. And this will mean a bit more to those of you that watched the videos previously. But if you did, hopefully you remember me talking about that pink line there, that 200-day moving average, and how, that was going to be the first big battleground. And you can see today it temporarily succeeded, got slightly above that area, and then just got absolutely hammered to the downside. Now, yes, there was the Fed meeting today, and sure, that played a role. But at the same time, it's just weird how things like that all kind of work out, where you have everything behaving, and then, some sort of external event happens, and the chart just behaves like, in a non-shocking way. And if you have experience, then I'm sure you've seen time and time again, movements bounce up and then get rejected by that 200-period moving average. Now, over time, I'm not saying that the price can never get back above that level. I'm just saying from strictly a technical point of view, it wasn't exactly shocking to see the price ultimately get rejected up at that area there. So current value of that 200-day moving average right there at 442. So that'll remain that main area of resistance. As far as supports are concerned, the area now that I'm very, very, very curious about moving forward is $426. In fact, let's just do this. Let me just get rid of that line there to clean things up a little bit. But that green line right there at 426 is a level that I think a lot of people are watching. And if the price does come down there and break through there, that could be the trigger point that sends us into another leg to the downside. So we'll see what happens, but no doubt about it, 426 key area of support, and then that 442 mark key area of resistance. Now, another little quick clarification point. The SPY, that was using the daily time frame, but moving forward, I will now be using the 30-minute. So for you beginners out there, all that means is that each one of these candlesticks, instead of representing an entire day, now just represents 30 minutes. So with that being said, next one here, XELA, talked about this in the previous day's watch list, and a very nice move today. Although once again, the price is pulling back, but in some sense, it's almost a case of deja vu because, yeah, yesterday the price made a move and then pulled back, and then once again made a move and is once again pulling back. So in all actuality, from a technical pattern perspective, we just have ourselves another bull flag pattern here that has formed, with the main area of support, though, now moving forward being that 200-period moving average, that pink line there, currently valued at 59 cents. So keep a close eye on that from a support standpoint. As far as areas of resistance are concerned, pretty straightforward level, which I always like. You have that trend line right there, which I assure you people around the world have drawn that trend line. And I say that because when a lot of people are watching the same thing, wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movements. So while nothing's guaranteed, certainly logical to think that if the price gets up to that level and then can break through it, that break in and of itself could create quite a bit of upwards buying pressure. So definitely keep an eye on that dynamic right there. But overall, nice pattern, and not just a question moving forward of can this overall trend continue to build upon itself. Let's see what happens. Next one, AMC, and this will certainly mean more to those who have watched the past videos. But if you have, you are probably cursing the name of that purple line there, which I've talked about over and over and again, being the 50-period moving average. Because once again, sure, the price was able to get above it, but as I've talked about time and time again, it's not necessarily about breaking above a certain level. It's can the price actually stay above it? And once again, no, it cannot stay above it. Price fell all the way back down to it, and then after that, just fell right back below it. So a faulty breakout here. Now, to look at things, on the bright side, at least the price is still up above 1550, which I talked about previously as being a key level of support. In fact, during this big downfall there, the price didn't hit it exactly, but certainly got within the range of that, 1550 mark and held strong. But point here being is that really nothing has changed from the past videos. So if you watched yesterday's video, then all this sounds the same. 1550, still the key level of support. And then that 50-period moving average, The purple line there, still the key level of resistance, although because that's a moving average, the new value of that is now basically right around $16.50. But yeah, brutal day. Such a great breakout, and then a complete and utter failure back below that level. So that purple line there, yeah, definitely remains a thorn in the side of the bulls. Next one here, TSLA Tesla, and I'm not patting myself on the back here, but I am patting charts on the back. They are a tool that certainly, I'm not saying is the holy grail, I'm not saying they're perfect, but they need to be learned, and this will mean more to those that watch the past videos. But if you have watched, you know that I put that green line there at 905. I mean, you just can't make this stuff up. Now, if you think that I just threw this line in here, then I'm not offended. I could be a stranger to you. All you got to do is go back in the video archive, watch previous watch list videos. But talked about that 905 mark, and look at this. You just can't make this stuff up. Look right where that insane move came down and bounced from. Right off 905. Absolutely crazy. Now, I do want to throw in a bit more levels here because there's earnings here. So some of these levels could very well be in play. So on the downwards way, if the price heads back down, key definitely overarching level down there around 855. Again, might not come into play, but with earnings, you just never quite know. But to be fair, on the flip side, yeah, you still have this level here at 950. Like AMC, that level was broken above, but when it comes to maintaining above it, was not able to happen with the move downwards. So 950 going to be that initial area of resistance. But because of earnings, I do want to map out one more level with the next overall arching level being up there right around the 995 mark. So keep an eye on these areas, and we'll see how it plays out with earnings. But from a technical point of view, these are going to be the general levels that I would certainly keep a close eye on. Next one, BBIG. Now, the first thing I want to do here is actually just extend this trend line out. It's been several days since the last time I did this video, but regardless, just want to extend this line out because it could very well be coming into play here soon. So that's just an overall trend line. So that's going to be the main area of resistance. Let's call it right around $3.50. And that's just simply coming from a trend line that I put into place quite a while ago. But what's very interesting here, and I'm going to zoom back in here, is we have some also well-defined areas of support. And that well-defined area right here at $2.85, which you know a bunch of shorts are going to be watching that level too. And, you know, to be fair, they might be wrong. They could be, right. But if the price comes down there and breaks through that level, no guarantees, but that could very realistically send this thing down to $2.60, if not even lower than that. But like I said, to be fair, you can also see longs. Well, what are you talking about? The price has bounced from that area before, basically bounced from it right there. So the price could come down there and bounce again. Not guaranteed to happen, but that's once again a logical thought process to have. So both people, shorts and longs, have a logical thought process, which is why risk management matters, because somebody will be right, somebody will be wrong, and you got to just manage risk in that regard. But that doesn't take away from the fact that I think moving forward, a lot of people will be watching 285, and then a lot of people will be, keeping an eye on that trend line right there as resistance. But overall, you got some upwards movement here, but is this upwards movement going to be enough to eventually push it through that trend line? That's the big question moving forward. Next one, ticker symbol EBON, and nice price range here if you like to play, sub $2 stocks, good volume. And this is one of the few stocks out there that actually did not get absolutely destroyed, which is always good when you have these smaller stocks. Sometimes they're disassociated with the overall markets, and this is a great example of that. But the good news here is the price did pull back, and I say good news because if you're somebody that's always a little bit paranoid, I don't know, am I chasing the price? Am I suffering from FOMO, fear of missing out? No, that's already happened. The people that were suffering from FOMO, they already bought up there. So now you have the pullback. So that makes things, of course, doesn't mean it's going to be a guaranteed profitable trade, but it does at least eliminate that variable of wondering, are you suffering from FOMO? But in all actuality, from a technical pattern perspective, so just have a resistance there. We have a support right there. We have the momentum move right there. And to make it even more visual, I'll put a little golf hole down there. So for you golfers out there, this would be known as a bull pennant pattern. So if you like bull pennant patterns, if you like to play this price range, then I definitely get this one on your watch list for tomorrow. Next one, SRRA, did this in yesterday's video and started off pretty quiet, not a whole lot of volume going on. Now, it's not like it was terrible, but it did start off relatively quiet, but the price then did eventually work its way up to that area of resistance there at 26, and you can see when the price broke above it, it had itself a very, very nice breakout, and as of right now, having itself a very nice final 30 minutes as we continue to see that candle form green here. But a couple updates, going to go ahead and get rid of that line as it served its purpose for now, and the next update is just simply based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. So moving forward, if there are any sort of pullbacks, $26 now going to be that main area of support. As far as areas of resistance are concerned, this is essentially Not totally in blue sky breakout territory because you have this level up here, but just a little moderate level of resistance right there at 29.50, and nothing fancy behind that reasoning other than the fact of that's just simply where the party finally stopped today. But after 29.50, and I'm looking here over off screen at the daily time frame, yeah, then that would put it at highs that have not been seen, as far as I can tell, for a very, very long time. But overall, the uptrend continues. Good to see the momentum remain strong. So we'll see how this one plays out on Thursday. Next one here, PLTR, and a wild day today, don't get me wrong, but taking a step back and looking at things from the past several day perspective, not a whole lot happened. I mean, you still have this level up here at 1350, the red line, as resistance. You still have this green line down here as support. Now, I realize that within the context of today, there is the false breakout there, and now the price has gone all the way back down there towards 1260. I'm just saying that, yeah, but in all actuality, it's just continuing to do what it's been doing and chopping around right here. But that doesn't take away from the fact that, when we go back to the talking point of self-fulfilling prophecies and a lot of people around the world watching certain levels, that there's going to be a bunch of people watching 1260, and rightfully so. It's a level that sticks out quite a bit as support, so keep an eye on that. But you also know that if all of a sudden it recovers, gets back up to the 1360 and potentially breaks up through there, that's a very valid level to think that could create quite a bit of upwards buying pressure. But at the end of the day, I think what matters most and what most people are going to be watching is just simply this sideways channel. 1360 top of the channel, 1260 bottom of the channel. So we'll see how it plays out over the next couple of days. Next one, NIO, and talked about this a few days ago, and it just made comments how overall it just seemed weaker. So not totally shocking, and I'm not saying that was a great comment or a great analysis on my part, but just saying that I can't say that I was caught off guard to see this thing acting much weaker than other stocks. Because think about it, the other stocks we've watched, they're at least still above their levels of support, and that's just not the case here. In fact, best case scenario, you could call the level of support down here at the $23 mark, and it's still all the way down below there. So that just shows that the general overall weakness of NIO continues, and that's also where our first update comes into play, again, just based on that foundational rule. When levels of support broken, they tend to act as resistance. So a 23 in the very near term is going to be that first key level of resistance. If the price bounces, gets up through there, then the overarching level going to be that purple line up there, 50-period moving average, currently valued at 24.75. As far as next potential areas of support, we may have to change to the daily time frame, actually, because I think, because it's been such a long time since the price has been down in this area of the chart. Oh, wow. Even on the daily. All right, there we go. So I realize it's harder to see, but like I said, it just illustrates that it's been a long time since the price has been this down low. So next key level of support right there at $20.50. But yeah, overall, the bearishness certainly continues. Next one, ARKK, the ARK Innovations Fund, pretty popular one out there, or I don't know, was popular. I don't know if it's remaining popular, how far it's down. But the big dynamic that happened today from a technical point of view was right here. It actually is hovering right around this $69 mark, which previously was a very solid and very important level of support. And technically speaking, sure, the price is slightly down below that green line there. But, supports are not exact specific prices. There is a range element associated with it. So to be fair, yeah, the price is still, within the range. However, that also means that there's really no more wiggle room. Any further the price goes, that just basically confirms the fact that, okay, yeah, this is no longer a support. It has officially been broken. In fact, some people would probably say, no, Clay, you got to consider that a resistance now. And I wouldn't argue against that. I'm just going to still call it a support because, like I said, it's still within the vicinity of it. But pointer being is there is zero more wiggle room now. Any further it goes just gives more and more, evidence that, yeah, this level is broken. And at that point, that could very well send the price down to, bare minimum, these lows previously down around that $65 mark. And then when it gets down there, that becomes another ball game because I don't know, could it double bottom? Maybe. But also don't want to get too far ahead of yourself because let's just first see if this $69 mark can hold or not. As far as a resistance standpoint, I think the level that a lot of people are going to be watching is that general trend line right there, which puts it right up around $75 as that main area of resistance. But yeah, overall, very, very brutal afternoon, and we'll see if this carries into the next few days. So that wraps up the top 10. Again, if you like what you saw here, if you want to learn more about the power of this tool, why it should be used, and how it should not be used, but overall just the consistency power that it can bring, then certainly get signed up for the class. Like I said, it'll be very soon on Thursday, January 27th at 7 p.m. Eastern time. And then as far as these top 10 videos are concerned, if you enjoy this format, then please do a couple of things for me. Hit that like button, leave a simple comment below, say hi, give me an emoji, tell me what you traded today. But those two things go a long way in communicating to me that you enjoy these top 10 videos. And as long as I know people are enjoying, then I will continue to make them. So again, if you want to learn more about charts and how they can be used to build consistency as a trader, definitely get signed up for that free class. Everybody take care. Have a good one.